Hi everyone, welcome to today's video. Before starting today's video, I want you guys to know that I myself have 3 years of investing and trading experience, and in this 3 years I've read enormous amount of books, I've watched enormous amount of videos, I've opted lots of courses, and the things which I took really long time to learn, I want you guys to learn in this small video of less than 10 or 15 minutes. So let's get the video started. In this video, I will be answering few questions like, is stock market risky? How much money should you invest at the beginning? How much returns should you be expecting from the stock market? And is stock market really a gambling or casino? And do you really need some kind of special degree or qualification to invest in stock market? And why does the prices in stock market go up and down? And lastly, why should you be investing in the stock market? To answer your first question, is the stock market risky? The unfortunate and direct answer is yes. Yes, the stock market is highly risky because now there are 5,500 plus companies listed on the National Stock Exchange and the Bombay Stock Exchange. In these 5,000 plus companies, there are few companies which will give you massive returns, which will 2x, 3x, 10x your investment. But there are companies which will take your investment to zero, which will destroy your wealth completely. So yes, there is a certain amount of risk in stock market. It is just like owning a business yourself. If your business does well, at the end of the year, you will have some money. But if your business does not do well, then at the end of the year, you might not have any money and maybe you might even face losses. But if you know the right way of investing, if you know the right way of trading your money, which I will be teaching you further in my new videos, you might minimize your risk up to a certain level. So make sure you hit the subscribe button to follow me and learn new things every day. Now that being said, let's move to the next question. How much should you be investing? So go watch this video where I've clearly explained the 50-30-20 rule of investing. To give you a brief, 50% of your income should go for your needs, and 30% of your income should go for your wants, and 20% of your income you should be investing in whichever asset class you pick. Now, let's not make this very complicated. You can start investing with as less as 500 rupees. You can just go and download apps like Upstock, Zerodha, Angel Investing, and open your demat account or trading account and start investing with as less as 500 rupees. And fun fact, if you start investing today, 10,000 rupees every month, after 20 years, you will have 1 crore rupees. Boom. The people who have the dream of earning 1 crore rupees, now it's not that hard at all. Just invest in a disciplined manner, 10,000 rupees every month, and after 20 years, you'll have 1 crore rupees. Moving on to the next question, is stock market really gambling or casino? The answer is no. Because in these days in our society, taking risk and doing gambling is become very synonymous. Every risk you take cannot be called as gambling, right? Investing is just like owning your business, owning your own business. In the basic difference is that in your business, you will be working to earn money, and in investing, your money will be working to earn more money. Now, before you start investing, please go and learn investing, okay? Because if you don't know how to invest, and if you just go and close your eyes and pick stocks, then that will be called as gambling. Certainly, that will be called as gambling. But if you know how to invest and if you know how to trade, then that will be called as planned risk taking. Now, there is a difference, okay? Taking risk randomly and taking risk in a planned way is different. So, if you know what you're doing, then it cannot be called as gambling. I guess now you have more clarity on if stock market is gambling or casino. So the bottom line is, learn before you invest and know what you're doing. So the next question is, do you really need some sort of degree or some sort of special qualification or special skills to be investing in the stock market? I'll tell you about this interesting experiment. There were 2 groups filled with 10 people. One group was filled with 10 chartered accountants, and the other group was filled with 10 teenagers. And what the experimenters asked both the groups was to pick 10 stocks each and hold it for 10 years. And after 10 years, when they compared the returns of both the portfolios, people were surprised to know that the teenagers portfolio had performed way better than the chartered accountants portfolio. Because what happened is the teenagers invested in companies like Coca-Cola, Apple, and good companies which they knew about, which they understood about, which they trusted. But what did the chartered accountants do? They just did some fundamental analysis, just did some research, and just read some chart patterns and invested, and they couldn't earn really great returns. So the answer to your question is absolutely no. You don't need any sort of qualification or special degree to be investing in the stock market. Now, coming to the next question, what really makes the stock prices move up and down, and why? So you need to understand a little bit of economics here. So economics 101. So what happens is there are more than one reason why the stock prices go up and down, and I will tell you about the two major reasons why the stock prices go up and down. So the first reason is that there are more buyers for a share. So to meet the buyer demand, the share price goes up. Or the vice versa could also be the case that there are more sellers for a share, and to meet the seller demand, the stock price goes down. So this is easy to understand, right? So if there are more buyers, the stock price goes up, and if there are more sellers, the stock price goes down. As simple as that. And the second main reason is news. So if there is good news and good atmosphere everywhere, then the stock prices will go up. And if there is bad news like war, COVID, uncertainty, then the stock prices will go down. And this is all you have to know about why the stock prices move up and down. And you can make many investment theses just based on this two information. Now we are down to our last question. Why is it certainly important to invest in the stock markets? Now, the first main reason is that you get higher returns compared to any traditional asset class like gold, bonds, fixed deposits, etc. You earn roughly 12 to 15% on an average every year in stock market. And if you're highly skilled at trading and investing, then you can earn a lot more. So the second reason is ability to start a business. Now everyone cannot go and start a small business for their second source of income, right? So some of you might be busy at your 9 to 5 job, some of you might be students, or some of you just don't have so much money to start your own business. And investing can be done with as small as 500 rupees, as you know. So what you do is just go and invest in others' business, and they will help you generate returns. Number 3 is pride of ownership. You can go out and tell people that I own a share of this company, I own a part of this company, and it is very proudful moment to tell people that I am an investor in these big companies. Number 4, the ability to earn passive income. Now, what is passive income? Passive income is something that works for you, and you don't really have to go and do anything, and the money will keep on multiplying itself. That is called as passive income. So in stock markets, all you have to do is just put your money in companies after doing research and everything, and even when you're sleeping, the money which you have put in that company will be working for you, because the company will be working, right? Number 5 is to beat the inflation. Now inflation rises every year by 5 to 6% roughly, and to beat that inflation, you also have to grow your money from more than 5 to 6%, and stock market gives you 12 to 15% on an average return. So to beat the investment, stock markets is one of the best options you have to invest. Now we have reached to the end of this video, and I hope that you have gained a little bit of knowledge through this video. And if you like this video, you can share it here on. And thank you for watching. See you soon.